We start off with the markets rebounding today as the U.S. temporarily eases restrictions on Chinese tech giant Huawei. And if you think you've heard this story before, you're right. Because despite all the recent volatility and headwinds facing the markets, the S&P 500 is right back to where we started at the same level we were exactly 2 months ago. So is this truly a stock picker's market now? And if so, what should you be buying, Tim? This is our wheelhouse stock picking.
Wheelhouse. By the way, our producer's playing some Steelers wheel stuck in the middle with you. Jerry Rafferty went on to a great solo career. So what would you be picking here in a world where so much stuff has sold off below the surface? So we spend a lot of time talking about semis, and we talk about some of the things that are most exposed to trade. First, I need to start with U.S. Steel because it's a stock I was more bullish on higher up. And this is a stock that's been destroyed in this last month, essentially the extra leg down. Here's what we've learned from management recently. We got kind of some first quarter guidance. And bottom line is actually the flat rolled segment's actually increasing somewhat. U.S. has seen a small deceleration, but the key for these guys is going to be CapEx. People typically would be worrying about a steel company's balance sheet during an economic downturn. So that's a name I really like. And I know this may sound counterintuitive as we go to kind of, war with Asia on everything tech and otherwise, but Tencent. So we talked about Bob. I'll leave that for somebody else. I think Tencent, it's arguably the world's most important tech incubator as we talk about gaming and as we talk about all the other dynamics of social media in that part of the world. I don't really see why Tencent is caught in the middle of a trade war. So if you're a stock picker based upon valuation, Tencent looks very interesting to me.
Stuck in the middle with you, by the way, is like the anthem of my life.
Yeah.
But going back to stock picking, I don't know if anybody out there watched Squawk Box this morning. Thank you. And saw our friend Savita Subramanian of Bank of America Merrill Lynch, the strategist. She was on saying, people don't care about macro people like me anymore. They want stock pickers because of what is going on. What is this backdrop?
So we started with saying, despite all these things, I would argue it's because of all these things that we're in the same place. We've seen this pattern for 2 months now. You get these big proclamations about a tariff or rate cuts or rate hikes or something like that, and then they walk it back, and the market just oscillates back and forth. So in this type of period, you want to have stocks. You want to have a stock picker. You want to be both long and short. So if we're just talking about the long side, look at the stocks that have a decent relative strength. I mean, what is strong right now? The U.S. economy is relatively strong compared to the rest of the world. So you look at something like MasterCard and Visa, levered a bit to the consumer. Even though we saw some retail stocks fall today, their growth rates are still fantastic in this environment. Stocks are going bottom left, upper right. They're very, very strong.
Yeah. Mark?
So there's a great opportunity in Alibaba right now. I mean, that stock's down probably 10% over the last 2 months. A lot of concern just because it's one of the biggest weightings in the emerging market index, and people have been selling that off because a lot of investors don't want to own it right now. But basically with Alibaba, you have the opportunity to own Amazon, actually a company that's growing faster than Amazon at a fraction of the valuation. So I think it's a great opportunity to really play the rise of that Chinese consumer, and you're buying at a discount.
Go ahead.
So and another stock we're looking at right now is Twitter. So Twitter, kind of on the flip side, is up 15% over the course of the last couple of months. And we're pretty sure that user engagement is going to be strong at least through the 2020 election. I think that's safe to say. And because user engagement is so strong, that's really helping to offset a little bit of slowdown that they're experiencing with user growth.
When you're seeing the relief that's happened twice now, we had the relief in terms of the tariffs over in Europe with the autos, and now all of a sudden we get this extension now with Huawei, right? So I think that's part of this whole thing too, right? I mean, that's the real story here to what your point was in terms of there's storylines that force us down, then there's storylines that pull us right back up. Look at how the semis today just absolutely were screaming to the upside. Apple, the rest of the techs, were all just screaming to the upside. After yesterday, it looked like they were done for good. I mean, it's amazing. So we're right where we were, and yet the volatility in this little segment has been really, really amazing, Mel. I mean, we're talking about 23 back down to 16, back up to 21, back down to 15. I mean, we have been everywhere. So I think it's going to continue to be very volatile. I think that we're still going to be this news. That's why I do like Twitter as well. But I'm going with a name like KMI. And the reason I say that is they are just so disciplined. And oh, by the way, Richard Kinder just bought another 300,000 shares just a week ago, again, to add to his buys that he does, it seems like, every couple of weeks. He just continues to buy back. I love the discipline of this company, though, because think back to 2015, they had a dividend of $1.93. They had to cut it. And they have been, since that time, adding back to it. Very disciplined. I think they're doing all the right things. And that's one of these names that I love. That was a pitch a long while back.
If you had stopped, and that's why I'm in, I would have never guessed Kinder Morgan. I thought after your whole spiel about technology and how it snapped back and this and that
well, they're going to be volatile, though.
Certainly named a semiconductor stock.
Right, and KMI just did another 52-week high today, so I like the semis. I love Apple.
But Pete, let me ask you, but because I agree on Kinder, but you talked about, hey, look, they were down yesterday. There's always something to bail you out on the headline. But to me, do you really think we're getting a solution on trade war anytime soon, especially with the headwinds we're facing? They were oversold. I get that on semis. I'm not sure you can make an argument that there's a headline waiting for them again tomorrow or the next day or the next day.
Yeah, but we've bought time. I mean, I think that's what we're seeing here is this negotiation process where we are buying time. We bought 90 days when we were talking about the tariffs with the autos. We bought another 90 days on this. So it gives us time to maybe do the quote-unquote negotiating that supposedly we hear about behind closed doors all the time. We hear it constantly, right? Somebody's meeting with somebody. Is she ever going to actually sit down with Trump and then actually try to hammer something out? No. Maybe, maybe not. So you say no. I think that they will. I just don't know what the time frame is.
I think the time frame is 2 years. I think the time frame's till after the election.
For the elections.
And I don't think the market's pricing that in. So as much as we're talking about what to buy in this environment, wouldn't want to minimize the fact that I don't think the market is pricing in a prolonged trade war. We're getting these incremental headlines and news stories forward. It moves the market up 1% or so. But again, we're going sideways. And that to me is a sign that the market is starting to digest this news, and eventually it will begin to price in a trade war.
Though. I mean, that sounds kind of bullish. If the market is digesting this news, it seems to me if something is digesting and holding serve.
Maybe indigesting is what we could have a blow off top where the market says, what, everybody's going to come to the U.S., it's the best place to be. But at some point in time, when the market understands that this is going to be a prolonged trade war, then you've got
Before
problems.
that time, do you put together a basket of trade exposed stocks and say, you know what, I'm going to short these guys or I'm going to position myself in the options market?
I think right now the trade is to more just play this undulation of headlines, right? So when it really looks horrible and they're saying, you know what, we're never going to have any agreement, and all these trade-related stocks go down, buy them, because you know the next couple days they're going to have another headline that says we're backing off a bit.
So look, I think a trade deal gets done before the end of the year. Just like I said yesterday, I think this is creating a lot of noise, a lot of good buying opportunities.
End of the year's 6 months away.
Yeah. I think it's likely it gets done before the end of the year. But yeah, a lot of volatility.
A lot of time in between now and then.
Lots of ups and downs, lots of opportunities for investors to find good entry points. We like software. We like medical devices. We like Constellation brands.
Let me ask you this. If the trade war does not, if it's not resolved in 6 months, and let's say it is much longer, does that change the way you look at your stock picks right now?
It doesn't, because our time horizon is a little more intermediate term. So we're not as in and out on a daily basis. So no, our strategy is to identify those companies now and get in while we can.
Same question
I think if we look at the allegory that we saw during the last kind of roll back the clock 9 months on this, you see the U.S. outperform for a moment. And for a time until it doesn't. The other dynamic here that you have to consider is the dollar. Dollar index goes over 98 today for the first time all year, and the first time in a long time. And if you look at the dollar chart, it's probably one of the best charts you're going to find. Slow and steady wins the race. Whether we have some type of a credit event on the back of slower global growth, or we just see a flight to quality, that is a risk for the market that the dollar moves higher.
Yeah, I think I'm a dollar bull at this point in time. I think we go much higher in the dollar, and ultimately down the road, it does cause a crisis. But in the first part of this is going to be everybody I'm talking to is saying the U.S. dollar is like the Swiss franc. It's stable. It's strong. The U.S. economy is strong. Everybody wants to buy here. Watch what billionaires are doing. They're buying real estate here in the U.S. That process has to go through. That's going to push the dollar higher.
That's really interesting, because I just was at an event not long ago with Mike Wilson from Morgan Stanley. He absolutely said the exact opposite. He thinks that the dollar has peaked. He thinks the dollar's going lower. And he talked a very bearish game in the longer term in terms of the markets. He thinks that they can continue to mull around where they are, as he's talked about for a long time, this grinding process. But he ended up being very bearish at the end of the day in terms of where does he think the market's going, in particular, where's the dollar going. He felt like it was going to slip.
And that's not where you stand, is it?
It's not where I stand, but I was willing to listen to him. I thought it made a lot of what he was saying was very sensible. Nice. Well, it was everybody's got their opinion. I would say this too. The trading environment's been phenomenal, Mel. I mean, I think it's been unbelievable.
The volatility
has absolutely delivered that. That range I was talking about, 15 to call it 20 even. I mean, the opportunities to buy at 15, sell towards 20, buy at 15.
Right.
And I'm talking about individual names here. I took off over 30 names in the last 3 days on my positions because it just finally was the opportune moment. Because this is a trading environment. Everything's been very, very short term. I have some long term plays,
Sure.
but I absolutely, all the short term stuff, I think took off half of it.